Right then, let's talk about debt. For many of us, it feels like a heavy weight, a constant worry that sits on our shoulders day in and day out. It might be a credit card bill that keeps getting bigger, a car loan that seems to go on forever, or even the massive commitment of a mortgage. This isn't about blaming anyone. Life happens. Unexpected bills pop up, incomes change, and before you know it, you're in a bit of a financial muddle. The important thing to remember is that you are not alone in this. Millions of people are in the exact same boat, feeling overwhelmed and unsure of where to turn. The good news is, you've taken the first, most crucial step just by being here and reading this. The desire to be debt-free is more than just about numbers on a statement. It's about reclaiming your peace of mind. It's about being able to sleep soundly at night without that nagging feeling in the pit of your stomach. Imagine a life where your hard-earned money works for you, not just to pay off things from the past. A life where you can save for a holiday, treat your family, or simply have a safety net for a rainy day. This isn't a pipe dream, it's an achievable goal. Getting out of debt gives you freedom, choice, and control over your own life. It puts you back in the driver's seat of your finances. This guide is designed to be your friendly, no-nonsense companion on that journey. We're going to break everything down into simple, manageable steps. Forget complicated jargon and confusing financial waffle. My goal is to give you clear, practical information that you can actually use. We'll explore some clever credit hacks, look at powerful tools hidden in your contracts like arbitration, and understand the consumer laws that are there to protect you. Think of this as your battle plan for tackling debt head-on, with confidence and a clear strategy. You don't need to be a financial wizard to make this work, so take a deep breath. Let go of any shame or fear you might be feeling. Today is a fresh start. We're going to arm you with the knowledge and the tools you need to make real positive changes. It won't always be easy, and it will require some effort, but the prize at the end is worth it. By the time you finish reading, you'll have a clear path forward and the motivation to take those first steps. If you find this video helpful, please like and subscribe. Remember, every long journey begins with a single step, and your journey to becoming debt-free starts right now. Let's get to it. Okay, let's demystify this term. Credit hacks. It sounds a bit technical, maybe even a bit dodgy, but it's not. In simple terms, a credit hack is just a clever, legal, and often little-known way to manage your credit and debt more effectively. It's about using the financial system's own rules to your advantage. Think of it like finding a shortcut on a map that gets you to your destination faster. These aren't loopholes for avoiding what you owe, but rather smart strategies for reducing the cost of your debt, improving your credit score, and making the repayment process much easier on your wallet. It's about playing the game smarter, not harder. One of the most common and powerful credit hacks is the balance transfer. Many people are paying outrageously high interest rates on their credit card debt, sometimes over 20% or even 30%. A balance transfer credit card allows you to move your existing debt from these high-interest cards to a new card that charges 0% interest for a set period, which could be 12, 18, or even over 24 months. This gives you a crucial breathing period where every single penny you pay goes towards clearing the actual debt, not just feeding the interest beast. It can save you hundreds or even thousands of dollars. Another simple hack involves understanding how your credit score works and taking small steps to improve it. Your credit score is the key that unlocks better deals and lower interest rates. A simple hack is to make sure you are on the electoral roll at your current address. This is a huge factor for lenders as it confirms your identity and stability. Another is to check your credit reports with all the main agencies, Experian, Equifax, and TransUnion, for any errors. A mistake, like a debt listed that you've already paid off, could be dragging your score down. Getting these errors corrected is a quick win that can boost your score. Finally, a less-known hack is negotiating directly with your creditors. This might sound scary, but it's often surprisingly effective. If you are genuinely struggling to make payments, don't just bury your head in the sand. Call your lender. Explain your situation calmly and honestly. You can ask if they would consider freezing the interest for a few months, accepting a lower monthly payment temporarily, or even agreeing to a settlement figure where you pay a lump sum that is less than the total amount owed to clear the debt. Lenders would often rather get some of their money back than risk you defaulting entirely. It's always worth asking the question. Now for a topic that sounds complicated but is actually a powerful tool for you, the consumer arbitration. Buried deep within the terms and conditions of most credit agreements, for your credit card, your car loan, even some mobile phone contracts, is something called an arbitration clause. In simple terms, this clause states that if you have a dispute with the company, instead of going to a big, scary, and expensive court, you can choose to resolve the issue through a neutral third party called an arbitrator. This process is usually cheaper, faster, and much less formal than a court case. So how can this help you with debt? Let's say a debt collection agency is chasing you for a debt you dispute, or they've added unfair fees and charges. Instead of letting them take you to court, you can invoke the arbitration clause. This completely changes the game. The company that wants to sue you is now forced to play by these rules. Often the company itself has to pay the initial significant fees for the arbitration to even begin. Faced with this cost, which can be thousands of dollars, they might decide it's not worth pursuing the debt against you anymore, especially if it's for a smaller amount. Using this strategy requires you to be proactive. If a creditor threatens legal action, you need to respond in writing. Your letter should clearly state that you are invoking the binding arbitration clause found in your original contract. You should also state that you are choosing to use arbitration to settle the dispute, as is your right under the agreement. It's crucial to send this letter via recorded delivery, so you have proof that they received it. This formal step shows them you know your rights and are prepared to defend them, which can often be enough to make them back down or offer a much more reasonable settlement. This isn't a magic wand to make all debt disappear. It's most effective for disputed debts, debts with unfair charges, or when dealing with aggressive debt collectors. For example, if a debt collector bought an old credit card debt and can't provide the original contract, but is still threatening you, arbitration is a fantastic defense. By forcing them into a process that costs them time and money, you put the pressure back on them. They have to prove their case, and if their paperwork is weak, they will often choose to drop it rather than risk losing in arbitration. It's a powerful piece of consumer leverage you probably never knew you had. It's absolutely vital to know that you are not on your own when dealing with lenders and debt collectors. There are strong laws in place designed specifically to protect you from unfair treatment. These laws act as a shield, giving you rights and setting strict rules for how companies must behave. Understanding these basic protections can empower you to stand up for yourself and challenge bad practices. You don't need to be a lawyer to use them, you just need to know they exist. One of the most important pieces of legislation is the Consumer Credit Act, 1974. It's an old one, but a good one. The Consumer Credit Act, or CCA, is your best friend when it comes to most types of consumer debt, like credit cards, store cards, and personal loans. A key part of this law says that for a debt to be enforceable in court, the lender must be able to produce a true copy of the original, properly executed credit agreement that you signed. If they can't find this paperwork, or if it's missing key information, they may have a very hard time forcing you to pay through legal action. You can formally request a copy of this agreement by sending a CCA request letter and a $1 statutory fee. If they fail to provide it within the time limit, they cannot legally pursue the debt until they do. Another important area of protection relates to the behavior of debt collectors. The Financial Conduct Authority, or FCA, has very strict rules on how they can operate. For example, they are not allowed to harass you. This means they can't call you at unreasonable hours, contact you at your workplace without your permission, or threaten you with action they can't legally take, like sending bailiffs without a court order. They also cannot discuss your debt with your family members or employer. If a debt collector is doing any of these things, you can report them to the FCA and the Financial Ombudsman Service. Furthermore, there are laws to protect you against unfair terms in your contracts and excessive charges. If a lender has slapped on huge default fees or penalties that seem disproportionate, you have the right to challenge them. The law states that charges must be a fair reflection of the actual cost the lender incurred because of your missed payment. They can't just invent a massive number to punish you. You can write to them, dispute the charge, and ask for a detailed breakdown of how they calculated it. If they refuse or the explanation isn't reasonable, you can take your complaint to the Financial Ombudsman. Credit card debt is often the trickiest because of its high interest rates, which can make it feel like you're running on a treadmill. But honestly, there is a clear step-by-step method to tackle it. The very first step is to stop using the cards. I know this sounds obvious, but it's critical. You cannot get out of a hole if you are still digging. Take the cards out of your wallet. Some people even find it helpful to literally freeze them in a block of ice in the freezer. This creates a physical barrier that makes you pause and think before making an impulse purchase. The goal here is to stop the debt from growing any further. Step 2 is to figure out exactly what you owe. Get all your latest statements together and create a simple list. For each card, write down the total balance, the interest rate, which is the APR, and the minimum monthly payment. This gives you a clear picture of the battlefield. Now, you need a strategy. The most effective is often the debt avalanche method. You continue to make the minimum payments on all your cards, but any extra money you can find in your budget, you throw at the card with the highest interest rate. This saves you the most money in the long run, as you're eliminating the most expensive debt first. Step 3 is to slash the cost of your debt by using the balance transfer hack we talked about earlier. Check your eligibility for a 0% balance transfer card. Websites that offer soft searches are best, since they don't impact your credit score. If you can get one, move as much of your high-interest debt as you can onto it. Make sure you check for any transfer fees, which are usually a small percentage of the amount moved. Then, work out how much you need to pay each month to clear the entire balance before the 0% period ends. This is your new mission. Finally, if you can't get a balance transfer card or you are really struggling, it is time to talk to your creditors directly or seek help from a nonprofit debt charity like Step Change or Citizens Advice. Do not ignore the problem. As we've discussed, you can ask your credit card company for a forbearance plan, where they might agree to freeze interest and reduce payments for a period to help you get back on track. They have a regulatory duty to treat customers in financial difficulty fairly. Taking action is key. Letting credit card debt spiral is the worst thing you can do for your financial health. Car loans, often called hire purchase or personal contract purchase agreements, can be a major drain on your monthly income. The first step to tackling this debt is to fully understand the type of agreement you have. Is it a standard loan where you'll own the car at the end, or a PCP deal with a large final balloon payment? Dig out your original paperwork and read it carefully. Knowing the terms, the interest rate, and the end date of your agreement is crucial. This information will determine the options available to you, so, getting a firm grip on the details is your starting point. If you are struggling to make the monthly payments, one of the most important rights you have is called voluntary termination. Under the Consumer Credit Act, if you have a hire purchase or PCP agreement, you have the legal right to hand the car back and walk away once you have paid off 50% of the total amount payable in dollars. This total amount includes all your monthly payments, the final balloon payment on a PCP, and any fees listed in the contract, all in dollars. This can be a real lifeline if your circumstances have changed and you can no longer afford the car. It won't damage your credit file, though it will be recorded that the agreement was ended this way. What if you haven't paid off 50% yet? You still have options. You could continue making payments until you reach that halfway point in dollars and then voluntarily terminate. Alternatively, you can contact the finance company and explain your situation. They may be able to offer a temporary payment reduction. Another option is to sell the car, but this can be tricky. You must get the finance company's permission first, as they legally own the car until the finance is settled. You would need to sell the car for a price in dollars that is high enough to clear the outstanding finance. If the car is worth less than what you owe, known as negative equity, you would have to find the cash in dollars to cover the difference. Another strategy to consider is refinancing. If your credit score has improved since you first took out the loan, you might be able to get a new personal loan at a much lower interest rate. You could use this new, cheaper loan to pay off the expensive car finance deal in full, in dollars. This could lower your monthly payments and the total amount you pay back over time. However, you must do your sums carefully. Make sure the total cost of the new loan in dollars is genuinely cheaper than sticking with your current one. Always compare the total amount repayable in dollars, not just the monthly payment. The mortgage is almost always the biggest debt anyone will ever have, and the thought of it can be daunting. But it's also usually the cheapest debt you have in terms of interest rates. The key to managing your mortgage is not to panic, but to be proactive and strategic. The first step is a simple review. When does your current mortgage deal, for example, your 2-year or 5-year fixed rate, come to an end? Put this date in your diary, on your calendar, on your phone, everywhere. Letting your mortgage slip onto the lender's standard variable rate can be a costly mistake, as the SVR is almost always much more expensive. Your primary weapon against mortgage debt is remortgaging. This simply means switching your mortgage to a new lender or a new deal with your existing lender to get a better interest rate. You should start looking for a new deal around 6 months before your current one ends. This gives you plenty of time to compare the market, get advice from a mortgage broker, and complete the application process. Securing a lower interest rate, even by a small amount, can save you thousands of dollars over the term of the deal and significantly reduce your monthly payments, freeing up cash to pay off other, more expensive debts. If you are struggling to pay your mortgage, the absolute worst thing you can do is nothing. Lenders are heavily regulated and are required to help you. Contact your lender's mortgage support team immediately. They have a range of options they can explore with you. These could include switching you to an interest-only mortgage for a temporary period, which would dramatically lower your payments. They could also offer a payment holiday, where you pause payments for a few months, or extend the term of your mortgage to reduce the monthly amount. Repossession is always the very last resort for a lender. Another powerful strategy, if you can afford it, is to overpay your mortgage. Most mortgage deals allow you to overpay by up to 10% of the outstanding balance each year without penalty. Even small, regular overpayments can have a huge impact. It reduces the capital you owe, meaning you pay less interest over the life of the loan, and you become mortgage-free years earlier. Use an online mortgage overpayment calculator to see how much of a difference even an extra $50 or $100 a month could make. It's often one of the best and safest returns on your money you can get. Feeling motivated? Good. Let's turn that motivation into action with some simple, practical steps you can take today, right after you finish reading this. The first and most important action is to create a budget. I know, the B word sounds boring, but it's the foundation of all financial control. You can't make a plan if you don't know where your money is going. Grab a piece of paper, a spreadsheet, or a budgeting app. List all your income. Then, track every single penny you spend for a month, from your mortgage payment to that daily coffee. This will reveal exactly where your money is going and where you can make cutbacks. The second step is the downshift challenge. Go through your bank statements and look at everything you buy regularly. For each item, from your supermarket shop to your car insurance, ask yourself, can I get this cheaper elsewhere? Can I switch from a premium brand to a store brand? Can I use a price comparison website to switch my energy provider or mobile phone contract? Every dollar you save by downshifting is a dollar you can use to pay off your debt. This isn't about giving things up. It's about paying less for the same stuff. It's a powerful habit that keeps more cash in your pocket. Third, have a financial declutter. This means canceling any subscriptions or memberships you don't use or value. That gym membership you haven't used in 6 months? That streaming service you forgot you had? These are money leaks that are draining your account. Go through your direct debits and standing orders with a fine-tooth comb. Be ruthless. If it's not providing real value to your life, cancel it. The cumulative effect of cutting several small recurring payments can free up a surprising amount of money each month to put towards your debt freedom fund. Finally, a very simple action. Check your eligibility for a 0% balance transfer card right now. Use a service that employs a soft search so it doesn't affect your credit rating. Just knowing what's potentially available to you can be a huge motivator. It shows you a tangible tool that could immediately stop the high interest charges and make your debt clearing journey so much faster. It takes just a few minutes, and it could be the single most effective step you take today to reduce the cost of your debt and start your fight back in earnest. Don't put it off. Do it now. So, there you have it. We've covered a lot of ground, from clever credit hacks and powerful legal protections to step-by-step plans for your biggest debts. It might feel like a mountain of information, but don't be overwhelmed. The key message I want you to take away is one of hope and empowerment. You now have the knowledge and the tools to take control of your financial situation. The path out of debt is not a secret reserved for financial experts. It's a clear, logical process that anyone, and I mean anyone, can follow. It starts with the decision to act. Remember that this is a marathon, not a sprint. There will be good days, and there may be challenging days. The important thing is to be persistent and to be kind to yourself. You are changing long-standing habits and tackling a major life challenge. Celebrate the small victories along the way. Every debt you clear, every dollar you save, every interest payment you avoid. These wins will build momentum and keep you motivated for the journey ahead. Don't be afraid to lean on support systems, whether it's a trusted friend, family member, or a professional debt advice charity. You don't have to do this alone. The future you're working towards is one of freedom. Financial freedom means you are the one making the decisions. It means your money serves your goals and your dreams, not the profits of a credit card company. Imagine the feeling of making that final payment, of owning your car outright, of knowing that your home is truly yours. Imagine the weight lifting from your shoulders and the peace of mind that comes with it. This is not just a dream. It is the reality that awaits you at the end of this process. It is the reward for your hard work and determination. So please, don't just close this page and forget about it. Pick one thing from this guide, just one thing, and do it today. Create that budget. Check your credit report. Make that call to a creditor. Take that first small, concrete step. You have the power to change your story. You have the ability to build a secure and prosperous future for yourself and your family. The journey starts now. You can do this, and your debt-free life is waiting for you. Good luck. No voiceover, just 4 seconds of black background with centered text. Green approval master enterprises.